All right, all right. All right, good evening everybody and welcome back to Walks and Wall Street. Today is October 22nd, 2023, and it is a Sunday. So I want to welcome everybody to the much anticipated Markets A Look Ahead live stream. For those of you who are new to the channel here at Walks and Wall Street, Monday through Friday, we have a stream basically talking about the financial markets, the major events that happened throughout that particular day. And since it's earnings season, we've mainly been doing a deep dive into corporate earnings. Now, on Saturdays, we kind of take the day off, right? We walk around, we explore different neighborhoods in the city. Sometimes we look at interesting property listings and even new developments that are going up in New York City. But on Sundays, it is the Markets A Look Ahead stream, where we go through Monday through Friday, all of the major events that are going to be happening each day on Wall Street, be that corporate earnings, FOMC meetings, key economic data points, anything that I deem relevant to the viewer, we are going to cover here live on the stream. So before we get started in talking about what I believe is going to be an even more important week ahead on Wall Street, let's do some quick review of what happened last week. Now, last week really kicked off corporate earnings season here in the United States. And obviously that starts off with all of the major financials reporting. This includes the major investment banks, regional banks, and even the credit card issuers. We did a deep dive into JP Morgan Chase, Bank of America, Goldman Sachs, Citi, and even American Express. Now, the big takeaway there is, number one, at a lot of the major bulge bracket investment banks, and just major investment banks in general, deal flow and activity is still way down. In 2021, you had a massive, essentially explosion in deal flow. Companies were going public, the M&A market was wide open, so companies such as Goldman Sachs and Morgan Stanley, to name a few, were making money hand over fist as it relates to fee income from taking companies public, equity underwriting, and M&A. Obviously now that interest rates are about 500 basis points higher than they were in 2021, well, a lot of that deal flow has sort of been tamed. However, we are starting to see signs of the IPO market, or the initial public offering market, start to come to life. Additionally, one of the major trends that we talked about last week is consumers are just starting to return back to pre-pandemic levels as it relates to delinquencies and defaults on credit card payments. We talked about the data from Bank of America, as well as American Express and JP Morgan Chase and Citi. You're starting to see quarter over quarter increase back to Q4 2019 levels of 30-day and 90-day delinquencies in terms of credit card defaults. Now, what was I would say the most interesting data point actually came out of American Express's earnings, and they reported on Friday morning. Now, provisions for credit losses increased to $1.23 billion. Okay, that was up from $778 million year over year. And essentially, to keep this in layman's terms, provisions for credit losses just essentially means more money is put aside to cover consumer defaults, okay? So that is pretty much one major industry trend we talked about last week as all of the major investment banks and financials reported earnings. Now, in addition to that, we heard from Jerome Powell, who is the Federal Reserve Chairman. He had a speech at the Economic Club of New York, and to use his terminology, he said he is going to continue to be resolute in bringing inflation back down to that 2% target. Well, if you remember from 2 weeks ago, we got the CPI report out, and inflation is still running hot. Right, headline CPI came in at 3.7%, much far away from that 2% target. Now, this week is going to be even more action-packed, everybody, and it is going to be so critical and so important to stay in tune with the market this week. And I'll tell you why. Last week was financial earnings. This week, officially starting on October 23rd, is going to be tech earnings week. So all of the, I would say, the large cap, massive tech companies in the United States are going to be starting to report earnings. Now, on Tuesday, we have Google and Microsoft, right? Two massive powerhouses in the tech space. Then on Wednesday, we have Meta and we have Amazon. Now, we're going to do a deep dive and talk about exactly what we should be looking at as these companies report earnings. Particularly with Microsoft and Amazon, we are going to be talking about their cloud computing division. Obviously, with Amazon, they have their very robust AWS, or Amazon Web Services platform. And with Microsoft, they have their very robust Azure platform. Last but not least, Google with their Google Cloud. But you know what I'm actually most excited about? Well, I shouldn't use the terminology excited. I'm most curious about. I'm very curious to hear from Mark Zuckerberg, to see what he's going to say. Okay, we had the Quest headset come out. We're going to talk about virtual reality, the new Meta Labs, and I want to see what Mark Zuckerberg says now that Tim Cook from Apple has officially launched their Vision Pro headset that I think is going to be available for purchase in Q1 of 2024. So tech earnings this week is going to be massive. And you may be asking yourself, okay, well, Tom, yes, tech earnings is important, but isn't the most important thing financials, because that is essentially the pipelines and the plumbing for the entire financial system. If the investment banks aren't healthy and stable, well, the world economy crumbles. Well, yeah, I think you're correct on that. But I want to turn your attention to a very good resource, okay? And you could write this down or put it in another URL. I want you to go to slickcharts.com. I'll say that again. I want the audience, the viewer, to go to slickcharts.com. SLICK charts.com. Now, why do I want you to go there? Well, I'll tell you why. So we just said that Google, Amazon, Meta, and Microsoft are all reporting earnings next week. Those four stocks alone, think about this, those four stocks make up 18% of the entire S&P 500. So if you go to slickcharts.com, they have an entire breakdown of every single company in the S&P 500, and they rank them in order of market capitalization. Now, I believe the top 10 stocks in the S&P 500 make up about 30% of the entire index. So if you're looking for market volatility next week, you may get it, because if we have Google bomb earnings, or maybe they even do really well, you're probably going to have volatility in the S&P 500 because those four stocks make up a massive percentage of the entire index. So a lot is riding on the wire here this week for these four stocks. It could really be make or break. Should Google, Microsoft, Meta, and Amazon blow it out of the water and absolutely crush earnings, well, that's going to change the entire predicament of the market. But if quite the contrary, we could be in for a rough patch going in here, leading into Q4. Lastly, we've been having a lot of these auto tech companies go on strike. That is going to be a major topic of conversation next week as we hear from General Motors and Ford. GM will report earnings on Tuesday, and on Thursday we are going to hear from Ford. Interested to see how they're coming along with their production as it relates to EVs. We're going to round out the week by hearing some GDP estimates. I believe that is going to be coming out on Thursday. And then last but not least, we are going to get the PCE index for September that is going to close out the week on Friday. Now, the PCE is the Federal Reserve's preferred measure for inflation, and economists across Wall Street are expecting core PCE to come in at 3.6%. Now, if you don't have time to watch the full 2-hour live stream and you want all of my financial thoughts and anything you may have missed during the live stream, I want you to go ahead and scan the QR code on the screen, because every other Thursday after the market closes, I send everybody who's a subscriber to Walks on Wall Street all of my equity research for free. So this Thursday after the closing bell, you could expect to see another edition of the Behind the Street newsletter sent directly to your email box, and we are going to be covering a lot. We're going to be recapping earnings season, we're going to be giving some predictions moving forward, and we are also going to be doing a deep dive into the Chinese commercial paper market, so you do not want to miss that. I've been getting a lot of feedback that the streams are very long. I understand that not everybody can sit through a 2-hour live stream. So if you miss a stream and you want to be caught up to date on every single thing that we're talking about and the most breaking headlines on Wall Street, go ahead and scan the QR code, punch in your email, and you will be all set. All right, everybody, happy Sunday. I'm going to go ahead and close up the laptop here. We are currently reporting live from 432 Park Avenue. I'll say hello to everybody in the chat, and we will get started. So give me one moment so I can pack up here, and we will be ready to go. All right. That was a pretty long intro, everybody, but I think it was very well needed because it's going to be a very busy week, and I don't want you guys to miss anything. It's going to be action-packed pretty much all week, and we didn't even talk about the bond market at all. All right, let me go ahead and scroll to the top, and let's say hello to the team here because this is the most important part of the stream. I see Brian is here. What's up? D, Ren1018. What is going on? British Gray, Crypto Meme, Noah is here. This is exciting for the week to come. The Investigator, Don F. Michael J is here. Welcome. Joe Ratz. Hey, the one and only Ryan Beck. What's up, Ryan? Hopefully you're ready for this crazy tech earnings week that we have kicking off here. I see Steph UF. Good to see you. Loose 72. Welcome. Colton Manning, Abdullah, Sally is here. Andre Almar says, hey Tom, have a nice start to the week. Appreciate it. We have the one and only, the talented Razzle Dazzle 786 that we've successfully recruited from San Francisco to New York. Always a pleasure to see you. Welcome. DC is here. Philip says, I made it to the beginning. You're right on time. Good to see you, Philip. Austin City Limits, Juan Fernandez. What's up, Juan? Hopefully you're having a good time in South Florida. Mothman says, oh, the Dolphins are playing the Jets today? That's interesting. Will, this is a very cool website, Tom, for the recommendation. Yeah, that's a really good resource. And I think, for those of you who are just getting in here, I was recommending a website called slickcharts.com. Now, the reason why I like that website is because it'll give you an exact breakdown of every single company in the S&P 500 by market capitalization. And we've been seeing an interesting dichotomy play out here in the market, I would say over the last decade. And over the last decade, you've been seeing these behemoth tech companies become more and more and more powerful. and essentially just acquiring smaller companies. And this is actually a major cause for concern for me, and I was actually going to write an article about this, so maybe we'll have 2 newsletters out this week. So I'll give you guys a little bit of a sneak peek. Here's my major concern. And I was helping out a friend who works at a very small boutique hedge fund. He was swamped with work, so he was covering some very small cap stock. So long story short, in an interest rate environment that is rising like the one we're in, the cost of money, the cost of capital is very expensive. But if you think about companies like Microsoft, like Apple, that makes up 7% of the S&P 500, Alphabet, Meta, all of these massive companies, the interest rate hikes really don't impact them as much. Now, why is that? Well, I mean, go take a look at Apple's balance sheet. Take a look at Microsoft's balance sheet. Take a look at Meta's balance sheet. The amount of cash on Apple's balance sheet is just staggering, right? So they already have the cash. If anything, this higher interest rate environment helps them out because now they can make a really attractive yield on the cash that they hold on their balance sheet. Where it is a massive problem that I'm seeing on the horizon. Let's take a look at some smaller cap companies. Right now we are looking at the top of 432 Park Avenue, by the way. Gorgeous building. We're going to take a quick walk towards Park Avenue. But here's my concern, everybody. I want you to take a look at the Russell 2000. So if you look at the ticker symbol IWM, right, that's an ETF that tracks the Russell 2000. It's really breaking down quite significantly, and I guess it makes sense, right? Because if you're a smaller company, the likelihood or the probability that you're going to have mounds and piles of cash on your balance sheet is relatively low, right? You probably have actually quite the opposite. You're probably tapping the capital markets, and you're probably tapping the bond market to raise money. And it's very expensive now to raise money. So we could see this dichotomy in the marketplace where you're going to see a wave of bankruptcies for smaller companies just because they can't sustain themselves because the cost of money is so great and they can't cover their overhead. And you're going to start to see maybe companies like Apple, Microsoft, Amazon, pick up all of these small cap companies for pennies on the dollar, and maybe we will live in a world over the next couple of years where we just have a few monster mega companies, like mega corporations, multi-trillion-dollar corporations, and it's going to be so hard to compete if you're a smaller cap company. Now, that may be a little bit far-fetched, but this is something I'm concerned about. Does anybody share that concern? Do you think I'm off base? Do you think it could be possible? What do you think? Let me know in the chat. We are now on Park Avenue. Look at how beautiful this view is, everybody. You have that really cool moon that's going in and out behind the clouds, and we're looking all the way down by the MetLife building and the Hemsley building, which is really nice. Juan Fernandez says, Tom, the ones with very low debt or debt to equity ratios below 0.8 will survive. Possibly. Dan Zhang says, Tom, it feels like SBV thing happened a long time ago, but it was only this year. I know, it feels like time is an illusion now. But you're right, the Silicon Valley Bank collapse happened this year, and I think the ripple effects are still rolling through the economy. JC is here. What's up, JC? Good to see you. Thanks for joining us. I see Jeff in Southern Tier, New York. Good to see you. It's actually freezing outside. I'm almost shivering. I think the next couple of live streams, I'm going to have to wear my winter jacket and a hat. It's getting cold here in New York City. To the right of us is the Ferrari showroom. Yesterday I showed you guys the Aston Martin showroom. Now we have the Ferrari showroom here. Hey, Gary Carpenter says my brother-in-law has the same name. All right. Hey, Lou 72. Hey, JC, this is Tom. Could you test that noise canceling setting? I haven't yet. I will though. I haven't yet. That's a really good feature. I'm looking forward to that. But we'll see. Hopefully it works, because I do take a lot of calls outside. Let's see what this guy is. It's a 1962 Ferrari 330 LM. I'm not even too sure what that is, but it looks nice. Hey, Peter Webley, what's up? Good to see you. You know what, since we're on Park Avenue, let's actually head all the way down and let's take a walk through Grand Central Station. We haven't taken a walk through Grand Central Station in a really, really long time, so we might as well do that. Wow, Dan, says Tom, this thing's cost is equal to a penthouse apartment in Manhattan. Really, that one? Well, you were telling me one of the Aston Martin vehicles were like $300,000, $500,000. It's kind of crazy. I mean, I'm not a car guy, so I can't really comprehend that, but it's wild. Now, this is a good view of 425 Park. This is one of the newest Class A office towers here in Manhattan. And we're gonna check on the construction progress of 270 Park Avenue. But this is the temporary home of Citadel, Ken Griffin's company. But the good news is Ken Griffin decided he's going to be building his own super tall here, which is great. Now, sort of to piggyback off of what we sort of just explained with small cap companies, particularly Russell 2000, you know, cost of capital going up, the cost of money going up, potentially putting some of these companies, forcing them into bankruptcy. There was a really good article in Barron's, really good article in Barron's this weekend that actually detailed this in line item. I'm not sure if anybody picked that up or had the chance to read it yet, but essentially it started off with the main thesis of Rite Aid, right? We talked about this last week. So Rite Aid officially files for bankruptcy, joining 516 US companies that have declared bankruptcy so far this year, starting in January, ending in September of 2023. Now, it's crazy because if you think about the years since, I would say, the bottom of the great financial crisis, so we'll just call it 2010, 2023 so far, okay, besides 2020, right? So we can kind of carve 2020 out of the data set just because 2020 was COVID, and that is like a once in a millennia, you know, black swan event that created mass chaos, not only in the United States, but in the entire world. But besides 2020, so far in 2023, the bankruptcy toll has been the worst since 2010. That's a pretty big eye-opener, guys. And I think this is really only the beginning. And I know I usually am an eternal optimist, but I'm also a realist, right? And we've been talking about this for a while. I actually wrote a piece on this a while ago called Zombie Companies. There's a lot of zombie companies in the Russell 2000. Essentially, since the financial crisis, we've been in an environment of ZIRP. ZIRP is an acronym that stands for Zero Interest Rate Policy. So it's allowed a lot of these unprofitable companies and unprofitable businesses to thrive and survive through endless debt acquisition. So since money was essentially free, right, factoring in after inflation, companies could continuously take on debt to pay off their existing debt and keep their companies afloat. Well, you can't do that anymore, right? Because the Federal Reserve has raised interest rates by over 500 basis points. This is an amazing view of 432 Park Avenue here. Really, really stunning. And now, the Fed funds rate is in a target range of 5.25% to 5.5%. So a lot of those companies that were dependent on all of this cheap debt, well, they're going out of business now. So everybody, this is my favorite office building in all of New York City. This is my absolute favorite building. This is called the Seagram Building. And the reason why I love it so much is because they built it so far away from the street. I'll sort of show you what I mean. You also have these two really nice water fountains here. It's really, really beautiful. And during the holidays, during Christmas time, they actually drain these two water fountains and they put, at least 50 real Christmas trees in each one of these fountains. And it looks really, really nice. But since they built the building very far away from the street, you have these amazing jaw-dropping views of all of the buildings around you. Look at that. It kind of looks like you're in a Batman movie like Gotham City. You see 432 Park Avenue. You see all of the other buildings surrounding Park. It's quite amazing. It's awesome. And this building that's right in front of us, everybody, we are going to go there right now and check out the progress of the construction of 270 Park Avenue. And 270 Park Avenue is Jamie Dimon's, so JP Morgan Chase, brand new office tower, which I am extremely excited about. In just a couple years, Park Avenue is going to be completely different because not only do you have, the brand new 425, which I just showed you guys, so that's brand new, Class A office tower. Now you're going to have 270 Park Avenue, and then in a couple years, Ken Griffin is going to build probably an even better building than 270 Park that's going to rival Jamie Dimon's mega tall tower, and this place is going to be rocking on Park Avenue. But guys, I think no matter how many crazy buildings they build here in New York City, this is always going to be my favorite building. 375 Park Avenue, the Seagram Building. This is my absolute favorite. Now there are some rumblings, and again, this is all alleged, that the owner of this building may be in some serious trouble due to obvious reasons that we've talked about, right? A lot of the commercial paper has to roll over, has to be refinanced, and it has to be refinanced at much, much higher interest rates than what they had in 2021. And this all comes at a time when vacancy rates are at all-time highs in the city. So hopefully, what'll come, what it may, we'll see. Hey, Ren 1018 is here. It's a stunning property, Tom. Thank you, Ren 10. Patricia Johnson says, Tom, my dad worked at 101 Park Avenue. Very cool. Love that. Albin says, better at day. DLXX says, Tom, I was a college intern in the Seagram Building. Oh, no way, dude. Let me take a screenshot of that. That is so cool. BS, dude. Now, I think Centerbridge is in here. One of my good buddies works for Centerbridge. But what an amazing experience to be able to intern in the Seagram Building. This is my favorite building, and I think I told this story before, and I'm so happy you shared that. But right before the pandemic, there was a competitor to WeWork, and I'm sure everybody knows the company WeWork, right, that was founded by Adam Neumann. I actually met Adam Neumann once. I've told that story a million times, but so there was a competitor of WeWork that used to be right in the Seagram Building, and it was called Serve Corp, SERVCORP, Serve Corp. And I was about to get an office in here, and I was so excited. It was a corner office. It was like $1,100 a month. And I was like, I can't believe it. I'm going to get my own cubicle in the Seagram building. And then guess what? Well, the big C came and, essentially, destroyed all those plans. Anyway, so ServCorp went out of business. Well, I shouldn't say that. The locations, pretty much every single location of ServCorp in Manhattan closed down, except the one that's in the brand new World Trade Center. So if you're looking for a co-working space similar to WeWork, but a little bit more upscale, there is a ServCorp location in the World Trade Center, but they used to have one right here in the Seagram building. Kind of crazy, but. All right, so guys, we are walking down Park Avenue, and this is the real Wall Street, right? We've explained this multiple times. You have Blackstone here, you have BlackRock just right off the corner. You have a lot of the hedge funds, family offices, big investment banks, private equity shops are actually right here on Park Avenue and in Midtown Manhattan bordering Times Square, right? You think about Barclays Investment Bank just in Times Square North. That used to be the old Lehman Brothers. So downtown in Lower Manhattan, the financial district, really has nothing to do with finance anymore, right? I mean, you have the New York Stock Exchange, but very, very little trading volume actually happens there. A lot of these settlements actually happen in New Jersey. Not a lot of people know that, but so it just goes to show that disruptive technologies such as the internet, right, and algorithmic trading really allowed for a lot of the hedge funds, broker dealers, investment banks to really migrate uptown because you don't have to be on the physical street of Wall Street anymore. So this is Blackstone. They also have another amazing view of 432 Park Avenue here. I see Victor, what's up? Warriors, says Tom, any thoughts about mortgage recasting, particular with a low rate? I'm not too sure. Recasting. I don't know. To be honest, I don't know what that is. Patricia Johnson says Columbia Mills. Surrey says 270 Park Avenue, steel construction is almost done. I work on it as an engineer for one of the electrical contractors. Oh my God, dude, that is so cool. It's funny because I remember a chatter was telling us he was an iron worker right here at 270. So could you give us any insights about the building? Like, what are your thoughts about it? It's a very, very highly anticipated building here in the city. I mean, it looks great, looks amazing. I give those iron workers a lot of credit. I think the two unions that I have the most respect for in the city, number one, the iron workers, and number two, the operating engineers. And I think the operating engineers are Local 14, I think. Yeah, Union of Operating Engineers, Local 14. I don't know how they sit in those cranes all the way up there. It's a really, really scary experience, particularly, I have this vivid memory of watching the news during Hurricane Sandy. And this was, at the time when Extel was just building 157. So 157 West 57th Street, that was the first building ever built on New York City's Billionaires Row. And the crane cracks off and it's whipping around in the wind. Oh, this is a Tesla taxi. Very cool. I think that's a Model Y. Cool. Yeah, this is the Waldorf Astoria. Now, we were in Miami a week ago now? 2 weeks ago? I don't know. And the Waldorf Astoria residences that are going to be erected in downtown Miami is going to be the tallest building south of the World Trade Center. So you have the Waldorf Astoria residences here in New York, and now in Miami they're going to build a massive, I think it's going to be 1,000 feet tall. It's going to be really, really crazy. Hey, Sabrina Ferris here. What's up? Good to see you. Sir, says Tom, there's a lot of work going on in the lobby and upper lobby due to all the security, networking, and electrical. Oh, wow. Yeah, I see them drilling a lot in the front. We'll come up on it now. They opened up the entire street. And it looks like they actually made Park Avenue a little bit wider, doesn't it? So here, let's use this as sort of a comparison. Check this out, guys. So all the way down Park Avenue, right, and this is very, very unique to Park, you have this medium here. And this is where they have all the nice decorative tulips, the nice flowers and all that. But it seems as if once you come up on 270 Park, they've taken out the medium altogether and the street is pretty wide. I think they did a good job. I don't know. I think I like it better like that. It just feels a little bit more breathable. It makes Park Avenue feel so much wider than it was. Now, here's my only critique. I would like to see a bike lane, like a dedicated bike lane put on Park Avenue. Because there's so many people who work here. And I think they deserve a dedicated bike lane. That's my 2 cents. All right, so here is the moment of truth. I love this structure and this design for the base of the building. Oh, Noah says, hey Tom, you're about to walk by my soon future office. Oh, Capital One or JP Morgan? Either or, man. That's, man, I'm jealous. Beautiful office space. Wow, the glass goes all the way up.
One building. That makes no sense.
What would you say? That's probably about 2/3 of the way already with the glass. Oh, no, this is UBS 299 Park Avenue. Hey, dude, well, congratulations on your job. I didn't know that. If you just accepted your offer, congratulations to you. That's an amazing accomplishment. And I know you'll do great there. They're very, very lucky to have you. Remember that as you start off. I'm not sure how far along you are in your career. Maybe you're, first year analyst, but they're very lucky to have you. So I think you'll do really, really well. Let's see how close we can get. This is all brand new too. This is an extension of Grand Central Station or Grand Central Terminal. This is, let's see, the doors are open. Let's check it out. So this will take you to the Metro North as well as the Long Island Railroad. This entrance has always been here, but they just recently encased it in glass. It actually smells really bad in here, so we'll exit. But I don't know, what do you guys think? First impressions on 270 Park Avenue. I mean, this thing, I wouldn't be surprised if it's on track to be topped off before the end of the year. Someone says, what's my career path? I started off in tech sales. So selling tech, telecom, software. Most recently, I ran the Northeast for a big managed service provider. So my territory, I was a director of enterprise sales. So I ran from about Philly all the way up to Maine, which was a very stressful job. But it was very good experience. We did very well. We were very profitable. And now I've transitioned to luxury real estate in New York City. and private equity. So this is the Hemsley building, and in the distance you have the beautiful One Vanderbilt building. All right, one more shot at 270 Park, and let's head to the Yale Club. And it's right across the street from the other JP Morgan Chase office. Victor says, Tom, do you have an opinion on Rite Aid going out of business? Yeah, so Rite Aid, they filed for bankruptcy. Now, there's a really good article in Barron's that everybody should read. It was really, really well written. I just didn't have enough time to program it in the Nightbot. But Rite Aid, now that they've went out of business, it makes 516 US companies that have now declared bankruptcy since the beginning of the year. So besides 2020, 2023's bankruptcy toll has been the worst since 2010. And you know, obviously my prediction is that it's going to get worse. And in Thursday's newsletter, I'll sort of lay out my reasoning as to why I think it's going to get a little bit worse. But you know, there was a multitude of factors going on here, right? Many people think it was due to all of the theft at the stores, but it was also due to intense litigation, guys. I'm not sure if many of you have been following, but a lot of these drug companies have been sued into the oblivion due to the opioid crisis, right? And rightfully so. I think I really do believe one of the worst things that ever happened, the biggest travesty in U.S. history, has really been the opioid crisis. It's so bad. It's like beyond belief. I think there's a crazy statistic that over 70% of Americans have at least a direct family member or a direct friend who suffers from opioids. And I believe that. I have a lot of friends who suffer from that, which is crazy, and they come from very, very good backgrounds, right? I have friends who've died due to this crisis. So yeah, I mean, that's one of the reasons why Rite Aid went out of business, is due to the intense litigation from this, but you know, also a multitude of other reasons, but they're not the only one. Now, you know what we also have an update on? So Microsoft recently acquired Activision Blizzard. Hold on, let me just cross here a moment. So it looks like that deal's a lock and it's going to go through. So the S&P 500 now has a brand new company that has joined its ranks. Does anybody know what company that is? This just happened on Friday. Does anybody want to take a guess? So Activision Blizzard is out, obviously, due to the acquisition. Microsoft bought it. So now we have a brand new stock in the S&P. And I think it's a very, very good company, actually. We've talked about it a lot. One of my good friends, that's a very successful hedge fund manager in Chicago. It's been one of his biggest positions for over 5 years now. Yeah, fun, says Lululemon. You're correct. Bradley, you're right. Lululemon, yeah. Lululemon is now the newest stock in the S&P 500. I think rightfully so. I think they deserve the spot. Really amazing company. I think I've told this story before, but I think it's appropriate to tell it again because, you know, Lululemon is now a part of the S&P 500. So I was reading some of my friend's research, who's a very successful hedge fund manager in Chicago, and he was outlining his thesis for why he's been long Lululemon. And it was 2 sentences. And I asked, I'm like, Jim, what do you mean? And so long story short, he's like, I want to see the percentage of revenue for menswear at Lululemon account for about 75 or get up to about 75% of current revenue for the female athleisure. Does that make sense? So Lululemon, I'm not going to say generally, but in most cases, Lululemon is an athleisure brand. It was mainly geared towards, women, right? Like for yoga gear, things like that. But now they're breaking into men's apparel, and I think it's taking off quite a bit, actually. And I believe they're very successful. So he says the total addressable market for that, he's like, I'll start to sell my stock once they have about 75% of the revenue currently. Oh man, that bike almost got wrecked by that car. Right in front of us too. This is the hotel where they're housing all of the migrants. It actually looks like it's cleaned up quite a bit. There used to be lines of people stretching all the way down East 45th Street, but that's one of the main migrant hotels there. Anyway, so he thinks that menswear for the athleisure brand either match the revenues for what it is today or be about 75% of it. By the Roosevelt Hotel, yes. I believe that's where they're housing the migrants. Now, I think it's appropriate that we're standing outside of the Yale Club because Amazon, ticker symbol AMZN, is going to report earnings on Wednesday. Jeff Bezos frequents the Yale Club from time to time, but before Jeff Bezos decided to start Amazon, he actually worked at D.E. Shaw, or David Shaw and Co. But yeah, I don't know. Anybody have any takes or thoughts on Lululemon? Or any men in the chat have purchased Lululemon gear? Hey, Daryl, what's up from Chicago? T-Pack 5000, good to see you. RPTs, has ever heard of, I don't think so. Let me take a screenshot of that. Is that the suit place or something? Where they sell suits and all that? I don't know. Anyway, but if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. And if you want to be signed up to read all of our equity research for free, this Thursday after the market closes, I will send everybody who's a subscriber to Walks in Wall Street my newsletter where we cover the US equity markets, really global markets, fixed income, and real estate. And that will be released this Thursday after the bell. So feel free to scan that QR code. You'll be able to read our latest edition and also be signed up to receive all further editions. Patricia says Gwyneth Paltrow says stay away from Lululemon. Gwyneth Paltrow, how come that sounds familiar? That name sounds extremely familiar to me, but I don't know why. Hey, Techno Pink is here. Good to see you. Thanks for joining us. I'm seeing many people say it's a little bit expensive, Lululemon. Lady Sarita says Lululemon used to give free classes online. That's why they did so well. Oh, is that right? I didn't even know that. Zach Drew says, Tom, I have purchased their menswear clothes, sports, casual. Interesting. Did you like it or not? Like it, not like it? Oh, Jay says, I have a Lululemon tote bag. So it seems about 25% of the audience here has at least a Lululemon product of some sort. Interesting. All right, so we're gonna get out of the cold. We're gonna take a little bit of a break, and we are gonna do a walking tour of the inside of Grand Central Station. So let's do that. Deborah S. I think we're gonna have autonomous factories. All right, so we are now inside Grand Central Station. Albin says, what's your views on cryptocurrency? I gave a very, very lengthy viewpoint and take on cryptocurrency on last night's stream. But I also have written about it. So the QR code that I just threw up there, I had published all of my thoughts on it. But we went in and did a pretty deep dive yesterday on it, like a big deep dive. All right, so here we are. We've officially reached Grand Central Terminal, which is beyond a shadow of a doubt the best, I would say the most well-kept train terminal in the city. Hey, Lynn is here, Janet S. This last night was excellent. Thanks so much. I'm glad you enjoyed it. Hey, D, what's up? Now check out those chandeliers here at Grand Central. Really stunning, spectacular. Now, I would have expected it to be a little bit busier tonight, actually. Usually on the weekends, like Sunday night, you have a wave of people coming back from upstate New York and even Long Island, coming back to the city. Maybe a lot of people stayed in the city this weekend, who knows? Hey, someone says, I start a new job soon. Any advice for me? I'm so scared and you seem really calm. What kind of job? That's awesome. Congratulations on your new job. Hey, Chris Tompkins. So Chris, says, how is Manhattan so busy while offices are 50% empty? It seems so wild. It is kind of wild, isn't it? Now, thank you so much for your donation. It's much appreciated. But get this, the MTA is in a little bit of a predicament right now because think about before the pandemic. There used to be increased train service Monday through Friday during rush hour, right, for obvious reasons. People need to get to and from work. And then on Saturday and Sunday, the MTA would decrease the amount of train service. Well, the pandemic has absolutely flipped that on its head. So there's actually more passengers that take the subway and the Long Island Railroad and the Metro North on the weekends now than during the weekday. Isn't that crazy? So they actually have to adjust the train schedules to have more frequency, which makes sense because everybody, you know, if you only are required to come into the office 2 to 3 days a week, people opt to come into the city on the weekends to sort of have, you know, an enjoyable time. See all the different sights, go out to eat, maybe see a Broadway show, go out to dinner, you know, do fun things. Hang around Central Park. So it's a really strange time for sure. Now the vacancy rates, it really just depends on where you are in Manhattan, right? If you break it down by neighborhood, on the island of Manhattan. If you're talking about commercial office space, particularly, we'll head downstairs and check out the food court. The financial district, so Lower Manhattan near Wall Street, Water Street, that has the highest vacancy rates of anywhere in the city. Because you're seeing this major migration from a lot of the Class B and Class C office space to Class A, which is pretty much all in the Hudson Yards. Some of it's going up on Park Avenue. KPMG has moved their office space from the east side to Hudson Yards, and EY did too. EY was right in Times Square. I think their office was 5 Times Square. I don't know how anybody could stand to go commute to work in Times Square. I don't even know how they did it. There was probably major backlash and complaints from the employees, and now they are joining KPMG at the Hudson Yards. Patricia Johnson, this is what's your favorite New York hotel? I like the Park Hyatt. The Park Hyatt is inside 157, which is the first building ever built on New York City's Billionaires Row. And I'm actually working really, really hard to get a listing in that building for a resale. But I think somebody else may get it. But I'll keep trying. Oh, DC 322, cool. Since I took the Long Island Railroad this past summer, my first solo trip to Long Island. How'd you like it, by chance? What town did you go to? Did you go to South Shore or North Shore? Peter Webley says, Tom, LA vacancy rates for office is 22%. That's a lot. These are really stunning chandeliers here. Oh, Hempstead, okay, cool. Hey, Matthew says, wow, New York City is becoming more touristy. I heard the whole MTA is going to have major changes in the 10 plus years in the future. I think so too, Matthew. I'd like to see more safety precautions and safety changes go on in the MTA. I have a lot of friends who are now working abroad, and they tell me in some of the other cities, particularly in Korea and Japan, you know, for example, like Tokyo, and maybe in Korea you want to talk about Seoul. They say it's just a more futuristic and more robust subway system, and it's a little bit safer. So instead of standing right on the open track where you could be pushed to your death, they have the glass sliding barricades, which I think is really nice. This is the very famous Whisper Wall here at Grand Central Station. So if you stand on this side and somebody stands here, the voice will travel all the way up the ceiling, all the way down and around to the other side. Hey, sir, thank you so much for your generous $5 donation. It says, hey, Tom, speaking about the MTA, how do you feel about the new congestion pricing? I think it's a load of bull, but the MTA mostly suffers from mismanagement. Yeah, I agree with you. I agree with you 100%. I think it's a total load of bull as well. Now, here's the thing, though. The congestion pricing is going to go into effect, but I don't think they voted on the exact amount that it's going to be. I read a New York Post article, and I understand the New York Post is a little bit, you know, I'm not too sure how reliable that is. But apparently, they're voting on whether the, what's it called? The fare is going to be $9 or $28. It's going to be in that particular range. And I think it's going to be horrible for the middle class and the lower class New Yorkers. I think it's going to be really, really horrible. I mean, think about the people who have to commute into the city from New Jersey and that take the George Washington Bridge. What were we saying yesterday? The George Washington Bridge tolls $17. So imagine getting banged for $17, and then you're going to get hammered again for, you know, $10 to $15. I don't know how people are going to do it. And I think that's why the state of New Jersey is suing New York over the congestion pricing. Just because you have so many people from New Jersey that commute to New York City, and that's really going to be, that's not fair for them, honestly, right? And I'm not even from New Jersey, right? I never go to New Jersey, but I don't think it's fair to people who have to commute. I don't know, what do you guys think? Hey, Michael W. says, I heard there was a tennis court in Grand Central. I think it's a squash court. I think it's called squash. They've had a squash tournament here before. You know, one of my friends is was a professional squash player. He was one of the, I think he was the top squash player in the world. Hasim Hashauer, Egyptian. One of the best, I think he won like the World Cup of squash or something. Anyway, all right, I think we're warmed up. Let's continue on our trek. Let's head all the way down to 34th Street, Penn Station, assuming we have the battery for it. I want to check up on the progress of the 2 Penn project, which is really put on by Vornado, so Steve Roth's company. Hey, Lemonade is here. What's up? Good to see you. Yeah, RPT, Sag Harbor. I used to go there all the time. Sag Harbor is absolutely beautiful in the summer. It's stunning, stunning place. Now that's all the way out on Long Island. That's way, way far away. I mean, that's from here, that's like 2.5 hours. But yeah, absolutely. Sag Harbor's beautiful, Watermill, New York, all of that. I'm very, very familiar with that. All right, so this is Pershing Square. Every time we pass Pershing Square, I think of Bill Ackman, the billionaire hedge fund manager, who is the founder and CEO of Pershing Square. Very successful hedge fund. They famously made, I think, just over $1 billion when they bought swaps on the S&P 500 during the COVID pandemic, or the Big C. So really quickly, not yesterday, but last week we heard from Elon Musk and Tesla as they reported earnings. It was a horrible quarter. It was disastrous, right? And I'm an Elon fan, okay? But that was a really, really nasty and horrible quarter. What was most concerning to me is the really, really damaging hit to operating margins. Single digits, down from 17%. One of the main things that Elon said specifically is he has a bleak outlook on the economy, and one of the main reasons why he has been continuously slashing prices of those Tesla models is because the vast majority of people need financing, and interest rates are extremely, extremely high. So in order to have that balance of buyers in the market to be able to afford a Tesla, well, he's going to need to cut pricing on a lot of those models. And I actually agree with that. I actually agree. We've got some news that defaults, or I should say delinquencies, people who cannot pay their auto loans, have reached an all-time high in this country. So you're starting to see the effects of higher interest rates kick in and increase those default rates. Now, next week is going to be extremely important, not only because we have major tech companies reporting earnings, but we are going to hear from General Motors, ticker symbol GM, and we are also going to hear from Ford, ticker symbol F. Now, those two companies are plagued with, all of the unions that are going on strike. So that's probably going to incur them additional costs in terms of, overhead for salaries and compensation costs. So I'm really interested to see how those two companies report earnings, particularly going into an environment where we're probably going to be higher for longer in terms of rates. We'll see if sales continue to be robust. I'm not even sure how that's going to be possible, but there was additional data that came out. Man, it's freezing out here. There was additional data that came out that says the average car payment now in America is over $900. That's pretty insane. So, think about if you're paying $2,000 a month in rent, you're paying $900 a month in your car note. You throw on utilities, you throw on your internet, you throw on everything else. Your basic overhead just to get you to and from work and to be able to put a roof over your head is $3,000 a month, right, in some major cities. That's really crazy. And going into the holiday season, I think this is probably going to show up in the retail sales numbers. So I think GM and Ford are the two, even though I very, very seldom track auto OEMs, I'm going to be on those calls next week. Ford and GM. Any predictions on those two earnings reports? What do we think they'll churn out? This is a good shot of the Bank of America Tower in front of us. Hey, good to see all of our viewers in Japan. Welcome. RPT says, Tom, Tesla is not a car company. It's the ketchup on Elon's bigger plans. I generally agree with that, for sure. This is a good view of the Chrysler building and One Vanderbilt. Yes, sir. I mean, here's my major concern with the unions. It's been like a chain reaction with all of these strikes, right? It's almost been nonstop. We had, how many strikes did we have this year? It seems like when one union negotiates their contract and they get a deal done, the next union starts to strike again. And my concern is that people from all across the United States are seeing this. And they're saying, hey, they got a better contract. They got a 20% raise. We want that. And it starts a chain reaction to that. And that puts a lot of pressure on wage inflation. And that's one of the things that the Federal Reserve looks at as they dictate their monetary policy. So some of these unions maybe could be shooting themselves in the foot, right? I think that's one angle that we need to look at. If they keep demanding these high wages, the Federal Reserve is going to look at that. It's going to show up in the inflation data, wage inflation, and you're probably going to have much tighter monetary policy for much, much longer than anybody's ever expected. And that means slower economic growth. And when you have slower economic growth, that usually leads to layoffs. And that usually leads off to an increase in unemployment. Now, I'm not saying that's going to happen, right? I'm just saying that may be a potential path. Anything I say here on the stream is just we're openly, creating hypotheses. It doesn't mean this is going to be true. The exact opposite could happen. We could have an absolute boom in productivity. But I think we need to think about both sides. Hey, Carl Roth, what's up? This is Tom. GM and Ford are in serious trouble, too much debt, and they both cannot put too much into the electric vehicles. Well, Tesla is the only US car company that hasn't gone bankrupt. Tesla almost went bankrupt, but they didn't. Everybody else has needed a bailout. Hey, Limitless NYC says, Tom, I used to work at Bank of America Tower. Very nice. When I lived in New York, and we called it OBP for One Bryant Park. Nice. How did you like working in there, by the way? Now, when you worked at Bank of America, did you know anybody by the name of Raj Malhotra? Now, Raj used to run all of S&P 500 equity index options at Bank of America. Really smart guy. He's retired now. He just manages his own money. But Raj Malhotra essentially dominated all of S&P 500 index options at Bank of America. All right, we are here at Bryant Park. Check this out, guys. Oh my gosh, I don't know how I feel about this. They're already building the Winter Village here at Bryant Park. I mean, it looks nice, but hey, Jerome H. Powell is in the chat. What's up? Good to see you. It says it's unpleasant to work with union workers. They like to do bare minimum. I mean, in some cases, but not all. I wouldn't say not all. Is it a struggle working with union workers sometime? Yes. I was in a union myself. I know the whole drill, but I will say this. It depends on what section or sector you're in. All of the union construction guys that I've ever worked with, particularly in New York City, they do top tier work. From my experience, you can really tell when a job was done like a chop shop and when a job was done with union labor, and particularly, electricians, operating engineers, iron workers. They really built this city and they don't do shoddy work. From my experience, others, it can be a major. I know both sides of the story, and I generally tend to agree with both sides. I could see it. It's a lot of, oh, that's not within the contract, that's not my job. I get it. Some people are like that. I wouldn't say everybody, but some people. Dan Sang says, Tom, have you taken the train, the Amtrak to Miami? Absolutely not. No way. I would never do that. I don't like being trapped for 24 hours in like a little tube. I just fly at 3 hours and I'm done. I know some people like to do that. Take the Amtrak to Florida from New York. I could never do that. I would die. All right, this is a beautiful view of the Empire State Building. You can really tell you're close to Times Square because it's like chaos. August ice is it's about 3 hours from New York City to Miami. About that, yeah. Sometimes a little less. That's why I bought a place down there, and that's why I chose Miami over Denver and many of the other big tech cities, because you could be in tropical paradise in 3 hours. I mean, that's a blessing in itself. No other country in the world has that. I mean, I love Canada. I love all of our Canadian viewers, but you can't beat the US of A, my friends. I mean, think about that. You could be in bone-chilling cold weather, and then if you get sick of it, you spend $200, same day, you jump on a plane, you fire up the bird, and you are in Miami. Hey, Destructionist, what's up? Good to see you. We are checking out Bryant Park, right outside the Salesforce Tower. Our good friend Mark Benioff, who also has a really good book he put out. It's called Trailblazer. For anybody who's early in their career, or if anybody that wants to build a startup or is working on a startup, I think you should read that book. It's called Trailblazer by Mark Benioff. There's some really good stories in there, but it's also more along the lines of a systematic framework that you can use to build your company. It's really good. And Benioff is arguably one of the best tech CEOs in history. I would put him, I'd probably go Steve Jobs number one, and I'd probably go Benioff number two. He really pioneered SaaS, software as a service. So we did pass Blackstone tonight on Park Avenue. This is looking at the backside of the one and only Stephen Schwarzman Building, the New York Public Library. This is right at Bryant Park where they're building the Winter Village. Oh my gosh, they have the ice skating rink up already? That's crazy. Well, at Rockefeller Center, they have the ice skating rink open too. That's wild. Well, I mean, think about it, guys. It's October 22nd. Next week is the last week of October. I should say the last full week, right? So a full 7 days. Next week is the last full week of October. It's insane. And we are going to go into November. I can't even believe that. It's going to be 2024. Holy crap. I remember doing the live stream on New Year's Eve for 2023. And before you know it, we're going to be doing it again. It's nuts. Wow, look at the moon all the way in the distance with the clouds buzzing through. It's amazing. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video. And click the subscribe button if you're new. We do these streams every day starting at 8:30. Oh, it's awesome, Juan. Hey, Tommy G's here. What's up? Now, since we're heading into pretty much the end of the year, we're getting probably one of the most important pieces of economic data out next week. And I think we're getting it out on Thursday, right? The GDP estimates for September. So the estimate for third quarter GDP will drop on Thursday. And we have to kind of think about the order in which a lot of this economic data and news is coming out, right? Because what's going to happen on October 31st through November 1st? Well, we're going into the Fed blackout period. And then we have the FOMC meeting where the Fed is going to announce the new course for monetary policy on the 1st of November. So we're going to get another update on if the Fed is going to raise interest rates, if they're going to pause, or if they are going to cut interest rates. We are going to get that on November 1st. So we're going to have the GDP estimates for the third quarter out on Thursday. And then to round off the week on Friday, we are going to get the PCE index for September. Now, many economists on Wall Street are expecting core PCE. So again, core PCE is exclusive, so they exclude volatile food and energy. They expect that to come out at 3.6%. Well, 3.6% is not 2%. So Federal Reserve Chairman Jerome Powell, who we have the pleasure of having in the chat tonight, spoke at the Economic Club of New York last week. And he said that the Fed is going to be resolute in their goal of getting inflation back down to 2%. And until the inflation is back down to 2%, interest rates are going to stay higher for longer. So food inflation is still very, very elevated. We also have shelter costs that are elevated, but they're just starting to roll over now. This is all important data leading up to November 1st, when we have the new, I should say the most up-to-date FOMC meeting. Yeah, Joe Driver, what's going on with that? The Speaker of the House thing. Now, I must admit, everybody, I am totally out of the loop on this. Like, I am unbelievably inept when it comes to this topic. But what's going on with this Speaker of the House thing? I have no idea. So we just don't have a Speaker of the House? Is that correct? This isn't my area of expertise, so anybody who knows what they're talking about, please jump in the chat and explain what's going on. I try I try my best not to pay attention to it because politics are just so nauseating. I probably should pay attention to it, but I just can't do it. I can't do it. Emmanuel says the speaker has been canceled 3 times. Yikes. Maybe I'll step up to the plate. Could I do it? Peter Webley says there's no speaker at the moment. I mean, maybe that's a good thing, right? Maybe that's a good thing. Has anybody ever thought about that? It's possible that this is a good thing. I think the country would be better off if just nobody makes a decision. Just stop making decisions and just chill out for a moment. Because every decision that is being made is either getting us into another war, fueling the military-industrial complex. So how about we have no more decisions and we just chill for the rest of the year? And maybe that'll stop all of the death. Western Mass Dave says no speaker, no legislation on anything. Maybe that's good. Maybe that's good. All right, everybody, we have now made it to the beautiful Macy's at Herald Square. Since we have the light, we might as well, you know what, we're not gonna cross. I wanna show you guys a restaurant that I really like that very, very seldom do we ever walk down or walk past anymore. This is a hidden gem among Korean restaurants. Oh my God, look at all that garbage. Well, it is garbage night. The garbage guys are here to collect it, but I think the city needs a little bit better plan to store the garbage instead of just having mounds and mounds of trash. So you have all of this nice garbage, and then you have a nice marijuana truck. So you can get your weed with a side of flaming hot garbage. All right, this is a very good spot. It's called Hanbot. This is one of my favorite Korean restaurants in New York City, and it's not in Koreatown. Koreatown is on 32nd Street, but this is very good. So I would recommend this highly. Let's look at the menu. Now they have a really good lunch special where they give you a soup, they give you a main course, and then they give you like a tea. I think it's like $20. It's not bad. It's actually really good. This place is really good. I actually may go here tomorrow if I can get an excuse to go here. Yeah, this place is good. Anybody ever been to Hanbot? You know, I think that's the next multi-million-dollar startup idea. If anybody wants to move to New York City, right? If you're young out of college and you're hungry and you want a problem to solve, right? Because that's really what entrepreneurs do, right? They figure out very big problems and then they solve them. Please, somebody move to New York and solve the garbage problem of where we store the garbage, right? Because essentially how it works now is all of the apartment buildings and all of the restaurants they just pile the garbage up to the heavens on the side of the road. And this is exacerbating the rat problem we have in the city. It's a big, big problem. So if anybody has an idea and you're seriously interested in, solving that problem, I'll fund it. I'll give you some seed money to solve the problem if you have a good idea. We need like a really sharp engineering student to come here and do it. All right, let's make this right on 5th Avenue. Michelle Henry says, get some big dumpsters. That's been tried before, and then that just turns into a big nightmare. Because people from on the street, they throw their stuff into it. It smells like crazy during the summers when you have these big, garbage cans out front. I don't know the solution. But I will make a prediction about it. I think in the next 5 years, it will get solved. That's my prediction. I think the problem will be solved in 5 years. Do I know what the solution is? No idea. But somebody much smarter than me will solve it, and they'll make a lot of money. Look at that. That is an amazing shot of the Empire State Building here. I wonder why the Empire is lit up in green tonight. Hey, Mariana, Texas, is Tom. That is one reason I don't enjoy visiting New York. Is trash everywhere. Underground conveyor belts to barge and take it to a big dump site, maybe. Yeah, I mean, look, you're not wrong. That is one of the things that's, a negative about New York. There's garbage everywhere. I don't really think that's a New York City government problem as much as it's a societal problem. But I believe this, and maybe I'm wrong, but people follow the leader, right? We're humans. We tend to follow people. We're followers. We're built to survive. Humans aren't really meant for thriving. We're just meant for survival. That's why we have that innate instinct to be afraid of public speaking, and we get this fight or flight response, and we tend to look up to a leader. And if you have a leader that will allow, people just throwing their trash on the side of the road, popping heroin and doing all that, well, then it's going to persist. But, if we need a leader that will constantly remind people, this is all of our city, right? And our city is our home. And when you walk in to your mother's home, when you go visit your mom, do you throw your cigarette butts on the ground in your mom's kitchen? No, she'd kill you. Do you, desecrate your grandmother's house when you go visit your grandma, or do you take off your shoes before you enter the house? You need to reframe that and pitch it as you don't do that to the city, right? We don't throw cigarette butts on the ground. We don't throw garbage, out of the window when we're driving on the BQE. That's what derelicts do. That's what scumbags do. And New Yorkers are not that, right? We have New York exceptionalism. We're professionals, and we're professional operators in this city. And that's not what we do. So every time you walk over to a garbage can and you dispose of your trash, you are reinforcing that idea of New York exceptionalism and being a professional operator, right? And if you continue to hammer that into people's minds, things will change. But it needs to come from a leader, right? You need to have Mayor Eric Adams on his Twitter account, doing that every day. Anybody ever been to Bonchon? Now, there's a couple other places that are better than Bonchon, but this place is okay. They also have another one down in Lower Manhattan. I believe it's just off of Maiden Lane. I think right on Maiden Lane they have a location, but if you make a right, so if you're walking down Fifth Avenue and you make a right on 32nd, you'll see a place called BBQ Chicken. And that place is much cheaper and it is unbelievable. It's fantastic. Hey, Patricia Ivory, thank you so much for your very kind and generous $5 donation. Thank you for supporting the stream. And here's another thing. We'll sort of get off the garbage conversation, but one of the reasons why the flooding was so devastating and ruined hundreds and hundreds of people's lives in New York City 2 weeks ago is because of the garbage situation, right? When people litter and throw things on the ground, well, it just doesn't go to heaven, right? It gets swept into the storm drains and it gets clogged up. And when you have 5 inches of rain in 48 hours and the rain has nowhere to go because, you know, people have little, you know, water bottles filled with urine in the street, you know, that's going to clog things up and it's going to flood places. So it matters. It's a big thing. All right, this is one of my favorite viewpoints of the Empire State Building. Fantastic. Right here on the corner of 32nd Street and 5th. An amazing, amazing shot. Really stunning. Let's take a walk through Koreatown. Hey, Teresa Diaz, or ID, says, what does a productive day look like for you? Just getting stuff done, just running a routine, you know, make a routine and just do it every day. I would say today was a pretty productive day. I had a good day. Now, Koreatown has, it's beautiful here, but Koreatown does have a big garbage problem. RPT's big work week ahead, very, very big. Next week is going to be just a crazy busy week, not only for work, but also on the stream. I mean, we have a lot of companies to cover. You know, next week kicks off the entire earnings week for big tech. 18% of the market capitalization in the S&P 500 is going to be reporting next week. That is a major week. We have Google, Microsoft, Meta, and Amazon. All of the major cloud providers, Amazon AWS, Microsoft's Azure, Google's Google Cloud, right? All going to get big numbers, right? If 18% of the market cap of the S&P is reporting, there's going to be some volatility. It could be make or break, right? But we're going to be covering it. We're going to do a deep dive pretty much every day, right? We have a big company reporting every single day. So we will do our deep dives and we will post our analysis on Thursday after the market closes. This is H Mart, one of my favorite grocery stores. But just as a quick reminder, so guys, this Thursday, right at the closing bell, check your email. So this Thursday after the closing bell, please check your email because I will be sending you the next edition of the Behind the Street newsletter. So 2 weeks ago, I sent you the breakdown of the CPI numbers, how that impacts valuations of not only equities, but real estate. We talked about order of liquidity. So if you haven't signed up and you want to receive that email for free, if you want to read an archive of all of our research, if you just scan the QR code on the screen, that will take you to our latest issue of the Behind the Street newsletter. You could read it, and you can sign up. So every other Thursday at the closing bell, you will receive all of our thoughts on the global capital markets, including equities, fixed income, real estate, and much more. And plus, if you don't have enough time to tune into the stream, right, we do these 2-hour streams every day. If you're busy, I get it. The newsletter is a great way to have a recap of all of the major events that we've talked about, breakdown of corporate earnings, and the like. So feel free to sign up for that if you haven't, and look for the email on Thursday. We will have that published. We may send out 2 updates just because of the volume of earnings, and we may do a little bit of a quick preview of the FOMC meeting, the Federal Open Market Committee meeting that will be concluding on November 1st. All right, let's check out the new Penn project. I'm actually excited to check this out. It looks even better than the last time we've been here. I think the last time we were here was about 3.5 weeks ago. We were checking out Penn Station. They've have more progress than before. It actually looks very, very good. Juan Fernandez, we're going to stay away from a lot of the protest talk just for now. Hey, the LT Prods, is Tom a possible money-making opportunity for someone who comes up with a cost-efficient idea / solution to the many cities' trash problem? Oh yeah, 100%. That's a $100 million problem. More. And like I said, I said this about maybe 20 minutes ago. We need a very smart engineer to take their talents to New York City and just work on this problem, right? You know, the city has hired all of these consultants from Deloitte. I think they just hired Deloitte and paid them, $250,000 to try to figure out the trash problem. These are fucking consultants. I mean, excuse my language. I've worked with Deloitte consultants, KPMG consultants my entire career. They're great people, they're very smart, but I mean, you need an engineer on this problem. You don't need a consultant who knows how to use Microsoft Excel. You need an engineer to come here and work on the problem. And I think a smart, recent college grad, if they have a little bit of funding, they could do it and they can make a fortune. But the thing is, the city, has big contracts with all these consulting firms, and, they'll do a study on it, and then Deloitte will conclude, well, we've concluded our study, and our study is that this is a big problem, and the garbage smells, and we need a solution. That'll be $1 million. And then the city writes them a check for $1 million. So hopefully we, some engineer out there, I'll fund it. I'll be a Series A investor. I mean, look at that, guys. That is crazy. Now, luckily for you guys are very lucky. You don't have smell-o-vision here. But, yeah, not the most pleasant. And it's like a little bit warm. I could actually feel a little bit of heat radiating from the garbage pile. And that's not a joke. It's a little strange. Noah says, have you noticed the trash problem has gotten worse over the years? I have. Yeah, I have. Now, the trash problem has always been a problem in the city, but what hasn't always been a problem is like the dirtiness, right? But the trash bags piled up on the street has always been like that. But just like the dirtiness, like the griminess of the city, like the litter on the ground, it hasn't always been like that. The city goes through ebbs and flows, right? You'll have a city go through a trough, then you'll have the city go through a peak, right? Just like all major cities. New York City is a massive, massive city, and it's normal for, New York to go through those cyclical events, right? It goes through down times, it goes through great times, and in my opinion, I think we're just starting to emerge. So if you think about like, a curve, right? Trough, peak. I think in New York City, we've gone all the way down here and we're just right here. So I think we're making that little, and I think we're about to go up. Now that may be the eternal optimist in me, but usually you have negative sentiment at its all-time high, right at the trough, and usually you have the problems so severe right at the trough as well. And I mean, think about all the problems we have. The migrant crisis, crime has exploded, and that is usually right around the time where things start to turn back to an extreme positive. And I think you're going to see New York City, it already is a powerhouse, but it's going to become an even bigger powerhouse like you couldn't even believe. At least that's what I'm betting. Now maybe that's a little bit contrarian. I know a lot of people are like, nah, no way, New York is all the libtards. I get so many emails, people saying, I can't believe you live in a libtard city. Anyway, look, I respect all opinions, but I think the city is going to enter a period of, it's going to be like a rocket ship. It's going to be unreal. This is an amazing view of the Empire State Building. So this is the construction site. This used to be a major hotel. I think this used to be the Pennsylvania Hotel, or Hotel Pennsylvania. They've taken the entire thing down, and I'm not too sure what they're going to build, but it almost looks a little bit awkward, doesn't it? At least it opens up this amazing view of the Empire State Building. But everything is totally demolished. But this is the new Penn 2 project that is almost finished. Looks really good. What a difference. From everybody who has seen Penn Station, back in the early 2000s, and you look at Penn Station now, it's a complete change. Complete change. I think they did a fantastic job on the new Penn Station. They raised the ceiling heights. It's just, it's really just an amazing, amazing transformation. Now the internet is a little bit spotty down there, but I have to take you guys down. I've showed you multiple times, but we do have a lot of new people. I give them a 10 out of 10 on what they did to Penn Station. It's unbelievable. And it's not even done. It's not even close to being done. So this is one of the main entrances, I should say the new entrance, to the Long Island Railroad. You can also get the 1, 2, 3 AC and E trains. Now, as we head down into Penn Station, you'll notice a few things. the ceiling heights, that's number one. And number two, all of the brand new retail. Now, for those of you who have never been inside Penn Station, if you look down there where it says track 18 and 19, right here, that's how tall the ceiling heights used to be throughout the entire building. It was like a dungeon down here. It was really, really bad. It was horrible. So this right here used to be the ceiling heights of the entire station. You know, looking at it now, I almost can't even believe how people were down here. But I was taking this train since I was little. And look at how they did an amazing job. It's clean in here. There's a lot of fresh air. We'll let this guy go up, but I don't know, what do you guys think of the new Penn Station? I think they did a good job. Now, right as you go up the escalator, you'll see all the way at the top, they've centered the escalator so you have a direct view of the Empire State Building. This is probably one of the coolest views in the city. So every time you're commuting into Manhattan, the first thing you're greeted with as you come up the escalator is a stunning view of the Empire State Building. It's awesome, right? It's fantastic. And this is all taken down. This is going to be a brand new, I think, an office tower. So we're going to get tons of new product in the city, which is great. I'll take you up to 34th Street. And then we will call it a night. But I think we covered a lot. I want to thank everybody for joining us tonight on the Sunday edition of Walks in Wall Street, the Markets a Look Ahead stream. I really do appreciate it very, very much. I think we covered a lot. All major big tech earnings is next week. We will be doing a deep dive into Google, Microsoft, Meta, and Amazon. We'll also talk about General Motors as well as Ford. And then we will cover the PCE inflation data and GDP estimates for the remainder of the year. If you want to sign up for our free financial newsletter, you can scan the QR code and punch in your email. And we will be sending that out Thursday after the closing bell. And I hope all of you have a fantastic rest of your Sunday night and an amazing start to your week on Monday. It's going to be a busy one, so I wish you all the best. And we'll meet right back here tomorrow night on Monday, live from New York City. Hopefully we'll be able to go downtown, Lower Manhattan, Tribeca, and explore that neighborhood. So thank you to all of our moderators, Jeff in Southern Tier, New York. Appreciate it. Thanks for joining. Lena Sandoval, Wendy England, DC322, Steph UF, Bill Tao, thank you so much. Mariana, Texas, Ellie317, Stephen Bates, All of our new subscribers, thank you all so much. There's always a bull market somewhere. You just need to know where to look. Western Mass Dave, Lemonade, everybody take care. We'll see you back here tomorrow. Have a great start to the week. Thanks.